Welcome back. Now for our market analysis segment, I am joined by Bongani Mabuza, who is the head of treasury at Nedbank. A very good afternoon to you, and thank you so much for coming to the studio. I'd like to perhaps start here. We saw the gold price hitting rather an all-time high, $3,500. What does this signal for you or perhaps global markets?
Yeah, thanks, Nazila. Good afternoon to you and good afternoon to your viewers. It's a real pleasure to be here. Yeah, you're right. The big story in markets today is really about gold, right? And as a result, it's affecting what's happening in FX markets, what's happening in equities markets, what's happening in fixed income markets. There is a flight to safety, if you may term it that, in markets right now, which has seen the gold price reach all-time highs. As a result, as you said, we reached over 3,500 for the first time yesterday, and we continue to go up. And I think that's a result of fear in markets. And at the back of that, there's a big sell-off in bonds. So previously, if market investors are uncomfortable with the risk in equities or other riskier assets, they would flight or shift towards bonds, towards buying bonds. But now there's a lot of fear also amongst bond investors. As a result, there's a sell-off in bonds across the world. So if you're selling off bonds, which are deemed as safe, the ultimate safe asset is gold. So that's driving the move towards gold.
Right. Due to the uncertainty, and OPEC Plus is actually considering supply increases this weekend. This is after a dip in oil prices. What does this mean for investors in terms of the figures? What are we looking at?
Yeah, 100%. So there is a consideration by OPEC to increase the supply. But in the back of that, there's also a risk that the market is pricing in. So the market is pricing in the possibility of further sanctions levied by the US on Russia. And as a result, you saw a big increase even in the price of oil, of Brent crude yesterday. The numbers we're seeing today is that oil is a bit softer, but it's coming off a high yesterday. And markets are waiting to see what OPEC is going to decide. All else equal, if you have an increase in supply, you should expect prices to come down. But if you then see a further levying of sanctions towards Russia, which is a big supplier, you're going to see a constraint in the global supply, and therefore you might see higher prices.
While we wait on OPEC, what are the numbers looking like today in terms of commodities?
Yeah, thanks. So in terms of commodities, you saw, as you mentioned, gold price hitting above 3,500. We're currently at 3,542, which is up about 0.25% from the same time yesterday. Brent crude is down 1.25%, but as I mentioned, this is it's down today, but it was up quite a bit yesterday. I think the big news will come after the OPEC meeting happens, and also as a result of developments coming out of the US, if the US decides to levy further sanctions on Russia or not. We will see. I think there's a lot that's happening there with the US and in Asia, particularly with the parade happening in China. We'll see if there will be any policy decisions that stem out of that. But as it stands, this is how the markets look, and I think the commodities markets are really pricing in a lot of the fear that is currently in markets.
Right. With the parade rather in China, we saw leaders Xi Jinping, Putin and Kim Jong-un meeting. Yes, there's probably not much of a discussion or an agreement or any policy changes, but these are world leaders. Anything could just happen. Their appearance on their own could just shift markets. But how are Asian markets reacting to this? Is there optimism over this get together?
I'd say what the markets are reading is as you say, there's not much policy decision that has come out of this meeting as yet. But what the markets are reading is what the repercussions would be, particularly from a US perspective. So that's what markets are really waiting to see happen. So we saw Asian markets from an equities perspective have a sell-off, but this was in line with the rest of world markets. I think as a result of the flight towards safety being gold, as we said.
All right. In terms of the equities now, how are the figures looking this Wednesday?
Yeah, no, thanks. We saw a continued sell-off in equities, and this is, the story is the same. Rising bond yields because of a sell-off in bonds. If there's a sell-off in bonds, there's a sell-off in equities. The S&P 500 was down 0.69%. This is, I think, from a US perspective, this was led mostly by the technology companies, which dragged the index down. The standout from a US perspective was really Alphabet and Apple, which were up 7% and 3% respectively. In the case of, in both cases, it's a result of Alphabet winning a court case, which allowed it to use Chrome as a default browser in Apple, and Apple gets to continue to receive a $20 billion payment from Alphabet annually. So Alphabet doesn't have to divest or sell off Chrome, which is good, and the market responded positively to that. In the case of Apple, the further news from an Apple perspective was that you saw the AI research lead in Apple being poached away to Meta. So that sort of dampened the stock. You sort of expect that it might have been up even more than the 3%, but otherwise markets were flatly down. From an SA perspective, the FTSE and SA, the JSE All-Share Index, were also down in line with global markets. I think the standout from an SA perspective was that we saw results from ShopRite, which were very strong. And I think for the first time, ShopRite singled out the online sales from the Checkers platform, which is showing that those sales they exceed the market cap of SPAR and Pick n Pay. It just shows how
SPAR and Pick n Pay combined or
individually,
okay.
Which just shows how strong a franchise ShopRite is. The ShopRite as a group, but also with the companies in the Checkers, etc. So yeah, I think that was quite interesting. Strong margins still across the group, and they continue to be efficient and they continue to grow.
Right. Now, with the sell-off in bonds and a spike when it comes to yields, let's look at currencies. If you're an investor, what would be your picks right now?
Yeah. No, thanks. Look, we saw. I'll just start with dollar emalangeni, right, which was at 17.63, which is down 0.35%. We saw the currency strengthen quite a bit because we opened markets this morning at 17.73, so it's up about 10 cents on the day if you look at from an ilangeni perspective, but the dollar is weak. You saw the euro against the langeni also down 0.19%, but just 1/5% today, and the pound is the exception here. But I think what is, in terms of a pick, it's a bit hard to tell because of the volatility of markets. But I'll just look at what we see here are day-to-day moves. But what's important to see is the trend, right? So the langeni against the dollar, as an example, is up close to 7% year on year. So it's showed quite a bit of resilience, quite a bit of strength. Yeah.
Right. Bongani, thank you very much for your insights. That was Bongani Mabuza, Head of Treasury at Nedbank, filling us in